So a lot of people in the multifamily space are talking about this being like a 15 to 20 day problem. Lots of syndicators out there raising money. I personally have 2 deals under contract to sell, so I'm the seller on both of those. And you know what? Everybody seems to think that this is like a 2-week to a month issue and it's all gonna get resolved. Well, after seeing the stock market today drop about 2,000 points, and seeing oil go down to $20 a barrel, I'm here to tell you guys that this is a much bigger and a much longer issue than what you guys are thinking. Now, obviously, we are positioned in the best, I think, asset class out of everything that is gonna get, affected. Everybody needs a place to stay, as we all know. But I think we should brace ourselves for impact, and we should get ready, because I think the next 6 to 9 months are not gonna be looking good. Even if they were looking good, let's just say everything after this COVID-19 comes back to normal, investor sentiment and investor confidence is at historic lows. We are officially in the longest bull run, or have been, officially, because as of today we're in the bear market, in the longest bull run historically. I'm talking to people who have lost 50% in the stock market in their portfolios. 50%, guys. So if someone had invested $100,000, he's sitting on $50,000 today and can't do anything about it. There's no way that they can get out of this. They just have to wait it out, just like everybody else. Now, the good thing about real estate is that we do not get directly impacted, and there may be some stimulus and some relief coming our way based on what we can negotiate with our lenders. And that is often the case. That is often what ends up happening with us. We are already talking to all of our lenders. We've opened up a line of communication, just making sure that they understand that this could be a bigger issue than what everybody is thinking about, and that we will need relief if the time comes. Now, the good thing is that we do have reserves on each one of our properties that we keep just as a metric that can hold us for some amount of time. So there's really not a big issue. And the other good thing is that we have the leverage to negotiate terms with our lender. Hold on, I'm just going to change my arm. Now, I think the industries that will directly get impacted, like starting next week, I think a lot of restaurants are going to go out of business. I think a lot of people are just not spending. Retail is going to be absolutely dead. People are staying home for their own safety, which is very, 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 very justified. But the thing is that you have to understand that this will all then later on trickle down. If there is no spending, there is no earning. People are not at those places of business. Employees are not getting paid. This all ends up trickling down and creates a snowball effect. Car values are going to go down. The car industry is a funny industry, because those notes were so easily accessible in the past. Anybody could get a car loan. And I think those loans are like junk loans, basically. And so there's all types of product floating out there as far as the automotive industry is concerned. I think that industry is going to be hugely impacted, as lenders will start taking a more closer look at who is trying to buy those vehicles. Now, obviously, this is something that we didn't anticipate. We haven't looked at in the past. It's something completely new. Nobody really, really, truly understands what's going on. I can tell you this. I am in self-quarantine. So I'm working out of my house. I'm doing everything I can just out of my home and trying not to communicate with the outside world physically, obviously. Lots of calls, lots of conference calls, keeping busy there. So yeah, those are my 2 cents, guys. I think this is a 6 to 9 month issue. I think the markets will come back.